Hey, this is Matt Muren with St. Louis Real Estate Advisors, and today I am excited to share with you some of the latest market data and also share what could this lead to for our summer of 2026. So let's first dig into some of the data that we are looking at, and this is from the St. Louis Realtors Housing Report for April 2026, and this looks at St. Louis region data. There's a few things that stand out to us in terms of comparing April 2026 to April 2025. First, pending sales are down a little over 11%. So that means there are fewer properties compared to a year ago that are under contract. So fewer things are getting under contract. Now, the second thing that stands out to me, and this is what we're watching. This has been the first month in a while. We've seen some interesting changes, and certainly some things that are pointing to what may be coming ahead. Inventory of homes that are available for sale have gone up a little over 12%. There are more things to buy. Supply has gone up. That matches the month of supply of inventory, up almost 15% when compared to 2025. So you have two indicators, the inventory homes and months of supply that are starting to rise. Now, we did see a median sales price go up. It's currently at $325,000, which is a little over 11%. That could be for a variety of reasons. One, the actual closings generally take place 30 to 60 days after they go under contract. So usually price lags slightly behind market conditions. So it's something to watch. If we see market or that median sales price drop, that could certainly be an indicator also of what's happening and what we're going to expect going into the summer market. Now, we are still, even with that 2.3 months of inventory, which is up, and the inventory of homes being up, we are still in a historically low levels of inventory. Most economists believe that months of inventory, a balanced market, would be 5 to 6 months of inventory. So we are still operating with a lessened supply, but certainly not some of the conditions we've seen, in the previous 2, 3, 4, 5, 6 years in the past. We've been operating under an extreme shortage of inventory these past few years. So, are we starting to see a softening of that extreme seller's market and moving toward a more balanced market? Perhaps. It's something we're going to watch. If supply levels continue to rise, yeah, that would be an indicator of demand perhaps coming down. Now, I would say we've seen some pretty rampant appreciation of pricing over these past few years. Supply being low, high demand that will push that price up. I don't expect we're going to see a drop in prices. I think we'll still be operating with a lower supply. So it's probably pricing will probably plateau or that appreciation will slow. But I'm not predicting for this summer a drop in prices. I think you're still going to see good demand levels, even if they drop slightly, and you may see some increase of supply, but I'm not expecting to see a drop in pricing. Now, compare that to what we're seeing with townhomes and condos. We are seeing a significant drop in sales. We're seeing a significant rise in number of condos and townhomes for sale, and we did see a 10% drop for pricing. The condo market has been, and historically this is true, a little bit softer. So we're going to continue to watch that to see how that is impacted. And certainly there's other factors, impacting that, whether it be insurance costs, things like that. So it's something to watch. So going into the spring market, what are our predictions? I think you're going to continue to see some supply levels rise. I think you're going to see pricing hold. But you're probably going to see a little bit of a slower market this summer. A lot of people with question marks, what's going to happen with prices, what's going to happen with the economy as a whole. Now, there are some universal truths. In this market, houses that are market ready, and that's where we have sat down with our sellers and we talk about what do you want to do to appeal to the buyer pool. So sometimes it's as simple as rearranging some furniture, getting rid of some things. Sometimes it's painting. Sometimes it's some landscaping. Sometimes it's some renovations or updates. Getting your house ready for the market. Those houses that are market ready and have done the work with us to create the plan and execute the plan and prepare the home, those are still going under contract in less than a week. And I don't think that's going to change. This buyer pool likes to see market ready where price and condition are in balance. So that won't change. So there is still a strategy with that. But those houses that maybe are not market ready, where they have not focused on what the buyer pool is looking at, you're probably going to start seeing some days on market go up. You're starting to start to see, you're going to start seeing some houses sit on the market longer. I think you're going to start seeing some days on market go up this summer to perhaps some higher levels than we've seen in the past. But again, real estate is always hyper local. So what happens in one part of the St. Louis area can be wildly different than what happens in another. It can change by school districts, by block, street by street. So that's why we really recommend having these personalized one-on-one conversations where we come in, we talk about the market, we talk about your property, we talk about getting it ready for the buyer pool, and really creating that plan or a strategy to make sure you're maximizing your return on the market. So again, this is Matt Muren with St. Louis Real Estate Advisors giving you kind of a market snapshot and some predictions on what we're going to see this summer. If you have any questions, never hesitate to reach out to any of us on our team. And again, have a great day.